Hey, what's up, ICT traders? Welcome back to the channel. Do you think gold is going to trade bearish this week or bullish? I want you to answer that question before we verify in this particular video. Well, to me, I feel gold is going to trade bearish, and I'm going to show you the reason why I feel gold is going to trade bearish. This is a new week. Today is Monday, and definitely we need to do our top-down analysis so we can know where price is going to trade into and how to expect price to trade into that area. Now let's do it step by step. So this is it. This is gold on the weekly time frame. What are we expecting on the weekly time frame? Just look at your price action. Look at your price action. What are you seeing? Don't even do anything. Don't do any delineation. Just look at it, and what do you think is happening? Price has been bullish for a while. And then look at what happened recently. Price has done something that it has never done for a while. Price have traded above the highest point that gold has ever traded to. Look at this. Breaking structure and clearing up all the liquidity that has been kept above this area. So where else is price going to go to when it has cleared every liquidity that there is above here? The only reason price moves up or moves down is because there is liquidity it is targeting. That is the engine behind the movement of price, definitely. So this is what has happened. External range liquidity cleared. What else? Definitely to target internal range liquidity, and that is to tell you that price is going to retrace, coming back into an internal range liquidity, which is the only thing I'm seeing here is this fair value gap and this bullish order block. So these two places, they are the attraction point for price. Price is going to come here, which means we're going to be patient for 1 week, 2 weeks, 3 weeks, 4 weeks, 5 weeks, 6 weeks. But we can do something else within this time window that price was going to trade into this area. Internal range liquidity. There are two types of liquidity, guys. There is something called the external range liquidity. All right, I want you to just get this liquidity, and there is internal range liquidity. All right, so these two guys, okay, liquidity, let me write it correctly. So these two guys, they are the ones that are actively represented by price. Every time you see price moves out, it clears external range liquidity and then comes back internal range liquidity. Look at an example here. Price clearing external range liquidity. External range liquidity can be found around such places, old highs or old lows. So when you clear external range liquidity, such as this place, all this place is filled up with liquidity. Liquidity is like the engine that moves price. Look at this. Liquidity in form of buy stops, clearing it out, clearing it out. If it finish clearing out everything, what else do you think price is going to do? Come back into internal range liquidity, which is this area. Let me clear it out and then put it for you to see. Internal range liquidity in form of things like order block, fair value gap, mitigation block, any of the institutional reference point. But then look at what price did. This order block, price trading into it, and volume imbalance here. Price trading into it before pushing up again. So price will always do this before doing another one here. External range liquidity cleared, coming back inside, hitting this order block, boom, external range liquidity. So the same pattern going to form here. So when we drop into the lower time frame, such as the daily, we're going to see more reason why price should go down. All right, let's assume this is the sky and the sky is cloudy. What do you think is going to do? Let me delineate that. That is a break of structure, or what we simply call a clearing liquidity. But then in this daily time frame, we're going to consider the break of structure right here, because this is the closest swing high we are seeing before price busting above it. So this place is now liquidity sweeping It's as simple as that, guys. Okay, so this now is telling you that there is no more interest in going up because liquidity has been cleared. Now we want to come back into internal range liquidity. We have seen a breaker block here and then a fair value gap right here, right at this point, guys. I just want you to see it, and the more reason why I think price is going to be bearish. So is this a sign that price was going to crash? This is just like a cloud full of rain trying to empty itself into this area. So we need a shifting market structure at every time we are looking for a reversal in price. This is an uptrend. For it to start a downtrend, there is need for a shifting market structure, and that is why we need the 4-hour time frame. All right, going to the 4-hour time frame now. We will also play out the same concept. Price moved up, retraced, move up to this area, retracing, try to go up again, but no energy on the buy side because all the liquidity has been swept from here. Remember this push, it was struggling because there is no energy for it to continue going up. So it retraced, creating this low, trying to go up, but couldn't even reach its previous record, crashing down, creating this one, even though this one is above here, to tell you that we are forming a higher low on this side. But then look at this lower high, couldn't even break this. Is that an evidence that price is losing momentum? Yes. And where did you see a shifting structure here? More reason for us to consider price as bearish. A market structure shift introduces a downtrend. So this is it. As price shifted structure in this point, it is now going to establish that bearish momentum, crashing down into that area on the daily time frame. So if you are thinking of buying gold, you should be careful. All right, look at this. You should be careful. Let me show you what this is. Can you see this? Up here, down here, up there, crashing. What do you have, guys? Is this looking like something that is familiar to you? Yes, that is a bearish mitigation block because price is going to target somewhere here and crash, and that forms a bearish mitigation block. So this is what we are seeing right here, mitigation block. The only reason why this mitigation block is there is price going back up there as a form of internal range liquidity. You see, this is why I said this concept operates across any asset. So this is the bearish mitigation block, and this is external range liquidity coming back inside. We are gonna find this bearish mitigation, and then look closely what you have above here. You have a volume imbalance. So if you don't know what a volume imbalance is, simply come to my YouTube channel, search for the video called volume imbalance. I don't need to go ahead and explain it again. So you have volume imbalance here, and then a fair value gap right here, very small one. Now the reason why this volume imbalance will not reject price is simply because if you pick your FIB level here to here, you're going to see that this guy is still in a discount area, and this fair value gap is in a premium area. So the more reason why I see price pushing up here, crashing. So this place will be our internal range liquidity, this particular fair value gap, and then there is also a bearish order block there. I don't know whether you can see this guy, a bearish order block. So the more reason why price will go there, and then guys, just a very quick one, I want to also remind you that every time you're doing technical analysis, you need to also check what is going to happen on the fundamental side. So to get all the fundamental news you need for the week, you can check fastbull.com. The link is in the description of this video, and it is placed in the first comment of this video. You can check it right there. So this is fastbull.com. There are a plethora of news here. So you can start by checking the economic news, which is right here, and see what the global economic news is going to have for the week. So this is it. You see the 247 news release and what is going to happen globally. You will see it right there. And then the economic calendar, where you're going to see all the news release across every country, every currency. You can screen it by simply clicking on this, and then you're going to check what country you want to see their news displayed. And there is also one special aspect of this particular platform, which is the AI signals. These signals are generated by AI. You can see, for example, gold is selling on that particular AI signal, so you can see all the signals that are generated by that particular AI. So you can check the link in the description. So the same thing going on here, guys. We are expecting price to sell, but is it time for us to sell? No. This is not the time for us to sell. We wait for price to come back into the internal range liquidity before we sell. Selling here is going to be risky because we are deeply in discount. We have swept external range liquidity, including this one. So we are looking at price going back up there before we take the sell again. The same thing here. Even if you go down to the 1 hour time frame, the same thing happening. There is a fair value gap right above here. All right, and something like a breaker, bearish breaker right there. This was where price have shifted structure from here. All right, the same thing happening, expecting price to push up before we crash down. So this is what I think the reason behind me saying that price is going to be bearish on gold this week. And then you can also check and verify for yourself. Thank you guys for watching. If you have any question, let me know in the comments. I'll be there to answer, and then I'll make sure I explain it. So this is it. Expecting price to come here, then we sell. Thank you guys for watching. See you in another video.